Good evening. Good evening. Alisa,
Sir,
Itisri, were you there in the last class? What we discussed regarding preparation of bank reconciliation statement. So, in the last class, we discussed regarding the reasons of disagreement between the cash book balance and the passbook balance, and we came to know that there are nine reasons of disagreement due to which sometimes the cash book balance does not match with the passbook balance. So, in such a case, it is pertinent from the organizational point of view or the business firm point of view that a reconciliation should be made between the cash book with the passbook. Okay, so passbook remain constant, and here when you are going to reconcile, the cash book is to be adjusted because cash book is with the business firm, and cash book given by whom? By the banking part or banking organization. So here what to do? Mm, uh, you have to prepare the bank reconciliation statement, and as I told you in the last class that by taking into account the two types of balances, the two types of balances are, one is favorable balance, another is unfavorable balance or overdraft balance. Okay, favorable balance, either you can take from the viewpoint of cash book favorable balance, or you can take from the viewpoint of passbook favorable balance, and all the items are to be, either it is to be added, or some of the items are to be subtracted. So let us discuss the theoretical aspect of that part um, with relation to the banking reconciliation statement. Now I am sharing one important part. Is it visible? So here it is written that preparation of bank reconciliation statement, and as I told you that favorable balances are there, and unfavorable balance, which is otherwise known as overdraft balance. When favorable balance is there, you can take either from the viewpoint of cash book or from the viewpoint of passbook. So if you choose to prepare the bank reconciliation statement from the debit balance as per cash book, eh, you have to find out the balance as per passbook is to be ascertained or passbook is to be found out. Similarly, if you choose to prepare the bank reconciliation statement by taking into account the credit balance as per passbook, then you have to ascertain what is the balance as per cash book. That is all about favorable balance. But in case of unfavorable balance or overdraft balance, if you choose credit balance, so already I make you understand what is the meaning of overdraft in the last class. Let us recapitulate in today's class. Overdraft means withdrawing more amount than that is there in the savings bank. Okay, so credit balance as per cash book, that is overdraft, is given, and the balance as per passbook you have to ascertain. Similarly, if you choose to prepare the bank reconciliation statement by taking into account the debit balance as per passbook or overdraft, for which you have to find out the balance as per cash flow. Okay, so what is the procedure, or what are the different steps that you have to take into account while preparing the bank reconciliation statement when favorable balances are to be taken into consideration? Some of the steps are to be taken into consideration. First of all, you have to choose, or you have to find out what should be the starting point, whether you want to take balance as per cash book or balance as per passbook. If you want to start with balance as per cash book, then you have to add all transactions that have resulted in increasing the balance as per passbook. Okay. Similarly, you have to take, or you have to subtract all transactions that have resulted in decreasing the balance as per passbook. Then with the first step, that is identification, or by taking into account the starting point, that is balance as per cash book, add all the items, subtract the rest of the item, then find out the net balance shown by the statement, which should be the same as shown in the passbook. Okay, let us solve one problem into account. uh, From the following particulars of Messrs. Ananya Industries, prepare bank reconciliation statement as on December 31st, 2006. So bank balance as per cash book 32,500. Check deposited into bank but not credited up to December 31st, 2006, rupees 8,900. Checks issued but not presented for payment, rupees 12,500. Bank credited rupees 5,000 for receiving dividend through electronic clearing system. Bank charges debited by bank, rupees 400. So these are the questions. Okay, how you have to prepare. First of all, what is the starting point? As per the question, the starting point is bank balance as per cash book. So, what we understood in the last part? We have to add all those transactions which results into increase in the passbook. Okay. So here, check deposited into bank but not credited up to December 31st, 2006. That means this should be subtracted or this should be added. This should be subtracted because in passbook it has not yet been credited, but already we have added. That's why the balance is showing 32,500. See, in the solution part, checks deposited 8,900 has been subtracted in the minus column. Here it is written. See where I am putting my cursor, 8,900. Second, checks issued but not presented for payment 12,500. That means we have subtracted from the cash book, but it has not yet been deducted from the passbook. So what to do so that it will make it equal with the passbook balance? Again, we can add it. So previously we have subtracted, but not yet deducted from the passbook. So now we can add to make it equal with the balance as per passbook. So third point, that is checks issued but not yet presented for payment 12,500. So here in the solution part, 12,500 in the plus column. Here it is written in the plus column, 12,500. Clear? Then in the fourth transaction, bank credited rupees 5,000 for receiving dividend through ECS or electronic clearing system. That means bank directly added 5,000, but we didn't know that bank passbook has been enhanced or increased by 5,000. So what to do so that we can make it equal with the cash book balance? We can add once it has been already added in the passbook or by the bank. So we can add this 5,000 in the cash book so that it will equal with the passbook balance. So see, in the plus column it has been written dividend received through ECS 5,000 in the plus column. Clear? The next last transaction, bank charges debited by bank, rupees 400. Bank charges means bank has deducted from its balance 400. Okay, 400 has been deducted. So what to do to make it equal with the cash book balance? Again, from the cash book it has to be subtracted. So let us go to the solution part. So here it is written bank charges debited by bank, in the minus column here it is written 400. Clear? So but in this way you have to prepare the bank reconciliation statement. So, how to prepare? At the top of the table or at the top of the bank reconciliation format, you have to write bank reconciliation statement of Messrs. Ananya Industries as December 31st, 2006. After that, you have to prepare a three columnar table. The first column is particular column, second column is plus or amount column, third column is minus amount column. And as per the theoretical aspect, balance as per cash book you have chosen, so that you have to write in the plus column 32,500. Okay, so already discussed there are certain transactions which have to be added and certain transactions have to be subtracted, that you have to write in the minus column. Okay, then after adding this and after subtracting this, already we will find out the balance as per passbook, that is 40,700. So both plus column as well as minus column remain same. Clear?
Nah.
Then let us solve another one illustration, that is take the figure given in illustration 1, prepare bank reconciliation statement taking balance as per passbook. Okay, so same question. Okay, same. Who is gossiping? Who is gossiping? Please mute your, please mute your mic. Please mute your mic. See, in the past illustration, we started answering that particular solution by taking balance as per cash book. Okay, but how when somebody chooses to prepare the bank reconciliation statement with the passbook balance, so 40,007, that is the passbook balance. So what to do? So only certain changes are to be needed. What are the changes? The changes are the items which have been added that are to be subtracted, and the items what have been uh, uh, subtracted that is to be added. See in the past illustration, here one item is there in point number 2, checks deposited but not yet credited by the bank. That means we have added in the cash book balance. So in this solution we have to subtract to make it equal with the passbook. But in the second case, when we took the balance as per passbook, this is to be added 8,900. See here, checks deposited but not yet credited by the bank, 8,900, that is to be added. Clear? Similarly, in the third transaction, checks issued but not yet presented for payment. Okay, that means here it has been added, but if you took balance as per passbook, it is to be subtracted 12,500. See, 12,500 has to be subtracted. So, what is the crux of these two different things? Balance as per cash book and balance as per passbook. The crux is that the items which have been added while taking balance as per cash book are to be subtracted while preparing bank reconciliation statement when balance as per passbook. So, like this, you have to prepare. So, this is all about the discussion regarding bank reconciliation statement. Any doubt up to this? So with this, we come to an end of discussion of bank reconciliation statement. Now we will move on to discuss regarding how to prepare the trial balance. How to prepare the trial balance. See, up till now, we discussed what different set of books of accounts like journal, how to record the transaction in the book of prime entry or journal entry, how to record those transactions in the book of secondary entry, that is in the ledger book, how to record the same in the uh, what is that in the subsidiary books. Okay, so after that, after journal is over, ledger is over, and preparation of all subsidiary books and cash book, along with that cash book, it is the responsibility of the business firm to go for preparing the trial balance. Okay, so what is trial balance? Trial balance is a statement, journal is a book, ledger is a book, subsidiary are the books, okay, cash books, like that. But trial balance is a statement. Why it is a statement? Because it is prepared only on the last date of the financial year, that is on 31st March of every year. So let us how to discuss how to prepare the trial balance. So, what is the meaning of trial balance? Already I told you that it is a statement containing the list of ledger accounts. Once you prepare the ledger account, after that you have to prepare the trial balance on a particular date. That is only on the last date of the financial year. That is on 31st March of every year. What are the features of trial balance? It is simply a list of accounts. It is simply a list of account. It is prepared for indicating correctness of the account. That means to judge the arithmetical accuracy of the books of accounts, it is necessary to prepare the trial balance. Whether there is any problem in preparing mm, journal book or while preparing in the ledger book. So, in order to ascertain any error, so that for which you have to prepare this trial balance. It is a periodical statement which is prepared at the end of the year or at any time during the year. It is a device for checking and testing the arithmetical accuracy. Just now I told that checking the testing the arithmetical accuracy in the books of accounts. If the total of debit balances agrees with the total of credit balances, it is assumed that books of accounts are arithmetically accurate. Though it is a device to detect error, all the errors are not revealed by the trial balance. Still, some errors. If the trial balance, if the two sides of the trial balance agrees, still one cannot assume that there is no wrong. There may be some wrong, but it is our responsibility how to eradicate those limitations while preparing the trial balance. Then let us discuss what are the objectives of preparing trial balance. Verifies the arithmetical accuracy. Okay, what does it mean? It means whether you have prepared or whether you have taken utmost care while preparing the book of prime entry or while recording the transaction in the book of journal and while preparing the book of secondary entry, that is ledger book. Satisfies the double entry system. That means both the debit side as well as the credit side have been recorded properly or not, that it satisfies. And the third objective, this is wrongly here it is written for, but this is the third objective, that is preparation of final account. Trial balance act as a question itself which will help you in preparing the final account. Then what are the advantages of trial balance? It ensures that the transaction recorded in the books of accounts have identical debit and credit amount. Okay, errors which are detected by preparing trial balance are rectified even before the preparation of final account. Final accounts cannot be prepared without preparing the trial balance. Agreed trial balance is a prima facie evidence of the arithmetical accuracy of the accounting books maintained. Balance of each ledger account has been computed correctly. The summarized balance of each and every ledger account can be accurately known from the trial balance. The debit and credit columns of trial balance have been added or correctly. Okay, so these are the advantages, and that we know that everything is having some sort of advantage and disadvantage. Limitation of trial balance are there. There are certain errors which are not disclosed by a trial balance. Again, the agreement of a trial balance is not a conclusive proof of the accuracy of posting. An agreed trial balance does not prove that all the transactions have been recorded. That means error of omission may be there. If you unable to record a particular transaction, still trial balance, the both the side of the trial balance will agree. So that is one of the biggest limitation of the trial balance. So it does not give information about the profit and loss made by the business accounting period, because trial balance is a statement which will help in preparing the trading account and profit and loss account, and after that we can know or we will be in a position to find out whether there is profit or loss made by the firm or the organization. A trial balance gives only condensed information of each account, a summary information. Okay, and how to prepare the trial balance? Basically there are two methods, that is one is total method and second one is balance method. Okay, but all the organizations they are preferring to go for following balance method. That means while preparing the ledger we found out that there are two items mainly coming. One is balance BD figure, BD, balance brought down. Okay, sometimes BD figures are written on the debit hand side, sometimes the BD figures are written on the credit side. So for each of the account which are showing two balance B by D, that means brought down. Okay, the account which are showing the two balance brought down figure are to be recorded on the debit column of the trial balance, and the accounts which are showing by balance BD, okay, by balance brought down figure, that should be recorded on the credit side of the trial balance. And if any of the organizations are following total method, then you have to take into account the total of the debit side in the debit column of the trial balance. Similarly, the total of the credit side and the credit side of the trial balance. But no need to take balance CD as well as balance BT figure in while preparing the trial balance. Okay, then this is the format of trial balance. See, at the top you have to write format of trial balance. At the top, you have to write trial balance of Messrs. So and so for which business firm you have to prepare and as on. What do you mean by as on? As on means that is on a particular date. On a particular date you are preparing. That is only on the last date of the financial year. And this is a three columnar table. First column is particular. Second column is debit amount rupees, and third column is credit amount rupees. And at the top, you have to mention either you are following total method of preparing trial balance or balance method of preparing trial balance. Okay. So let us solve one problem on this by taking in the information illustration 1 section C, that is in the journal. Okay, let us go to the journal first. So my sincere request to all of you that please click on this particular solution part so that you can easily understand. See, in trial balance at the top, you have to write trial balance as on which books in the books of Messr Consumer. And here I have disclosed that this is the total method of preparation of trial balance and this is the balance method of preparing the trial balance. Okay, that means from the ledger book, you have to ascertain what are the different heads of accounts have already been prepared in the ledger book. Cash book, this is the total of debit side 16,530, and this is the total of credit side 6,950. Like this for all the accounts, you have to find out what are the different amount, different total of debit side and different total of credit side. Then at the after writing all this, you have to total it. That means to find out whether the debit total is equal with the credit total or not. Debit total here it is 29,200. Credit total here it is 29,200. See, this is on the basis of total method. On the basis of balance method, that means only balance BD and to balance BD and by balance CD. See here, cash account is given in cash account here it is written 9,850 debit balance. Cash account shows debit balance 9,000 because to balance BD figure is there. So let us go and check whether it is correct or not. See, I'm sharing. See, is it visible? Now I have changed from trial balance to ledger account. Here,
Yes, sir.
this is
It's visible.
here. This is the cash account. See, cash account. Let us this particular person please click it out. Okay, take a picture of this so that you can compare with the trial balance. See, the total of debit side is how much? Total of debit side is 16,530. Where I'm highlighting. Okay, and except this balance sheet figure, what should be the total? 2 plus 1 3 plus 1 4,500, 5,000, 6,450, 6,950. Okay, so just write it down in your notebook. Cash account in total method debit side total is 6,530 and here it is 6,950. But here another thing, write down the cash account shows a debit balance, that is to balance BD, write down 9,580. Okay, so similarly for all these account, cash account is there, then capital account, then bank account, furniture account, depreciation account, purchase account, Mrs. Sobhagya account, sales account, discount account, Divya account, salaries account, commission account. All these things you have to take into account while preparing the this ledger. Sorry, this particular trial balance. See, once again, I am showing you the trial balance. See, 16,000 in total method. Cash account shows the total debit side 16,530 and credit side total is 6,950. Also, I asked you to write debit balance is 9,850. That is as per balance method. So, like this, for all the accounts, you have to mention if you follow total method, total of debit side is to be written in this, total of credit side is to be written in this. If you follow balance method, only balance BT and balance two balance PT or by balance PT figure have to be taken into consideration. Okay, so after recording all these, you have to total the total of debit and total of credit. Okay, so if you find if in any case the total of debit is not equal with the total of credit, then you have to assume that there may be some wrong either with the preparation of journal or with the preparation of ledger or with the preparation of trial balance itself. But simultaneously, as I discussed, or just now I told you that even if the two side agrees with each other, you should not tell that trial balance is correct. But because the error of omission may lie. Okay. So this is all about how to prepare the trial balance in the given set of books of accounts. Next, we'll discuss as per your syllabus, that is measuring business income. That is in your third module, measuring business income. Okay, so already I told you that what is the meaning of business and what is the meaning of income and how it can be measured. It can be measured only by preparation of trading account, and by preparing trading account, then only we can find out whether there is gross profit or gross loss, and by preparing the profit and loss account you can find out whether there is net profit or net loss. We'll discuss that is in block 4, that is preparation of financial statements. Okay, then in unit 8, revenue from sales, one term is there in your unit 8. Revenue from sales means how much revenue that have been generated by selling your merchandising commodities in the ordinary course of business. Okay, in the ordinary course of business. So then after that, another important term is written, that is cost of goods sold. What is that? What is the meaning of cost of goods sold? Cost of goods sold. That means what is the total cost of goods? Okay, cost of goods that you have sold in your day-to-day business operation. That is cost of goods sold. Then we'll discuss inventory valuation. Okay, what is inventory? Inventory means stock of anything. That is known as stock of anything is known as inventory, and how it will be valued in the very first class of this particular subject. I told you there are several methods how one can value the inventory. Either you have to follow FIFO method or you have to follow LIFO method, or you follow simple average, weighted average, or best of method. Let us discuss one by one what are the different methods of inventory valuation. Is it visible?
Yes, sir.
So inventory valuation, uh, simultaneously you can pricing, which will help in pricing of material issues. Okay, so this is otherwise known as stores ledger. So in that is this is one of the techniques of inventory control, which is otherwise known as pricing of material issue. And there are these are the few methods inventory valuation. There are here it is written the different different methods of valuation of issues of materials are mentioned below. One is a fast in, fast out method. In short, it is known as FIFO. Second one, last in, fast out method. It is known as LIFO. Third one is simple average method. Fourth one is weighted average method. Fifth one is best of method. Sixth one is highest in, fast out method. That is HIFO, inflated price method, and market price method. But out of that, only problem will come, the numerical problem will come in the out of first five. Okay, but as a BPA student, you must learn how to prepare the this stores ledger, or how to find out the value of inventory by following these three methods, first three methods, that is fast in fast out method, in short it is known as FIFO, last in fast out method, in short it is known as LIFO, and simple average method. Also, you should know about weighted average price method. Let us solve one problem on each of these case: fast in fast out, last in fast out, simple average, and weighted average. Okay, see the question very carefully. See the questions. The following transactions occurred in purchase and issue of a material in an organization during October 1999. Okay. As per the question, different dates are there. In different dates, different quantity of material has been received. See, on 4th of October, 200 quantity; on 10th of October, 150; 18th of October, 100; 22, 22nd October, 100. Then different rates are being given. That is, at which rate the business firm has been received, that is at 24, 23, 24, 23, like that. Similarly, as per the question, at different dates, the material has been issued. Only the quantity have been mentioned. How much quantity have been issued from the side of the organization, that have been mentioned. But at what rate it has been issued, that is not mentioned in the question. That you have to find out. So on 5th of October 1999, 250 quantity of units have been issued from the side of the organization. So at what rate it has not been mentioned. Similarly, on 12th of October, it has not been mentioned. 25th of October, it has not been mentioned. So it is our responsibility at what rate it has been issued. Okay, and as per the question also, uh, opening balance of inventory is there. That is on 1st of October 1999, 200 unit was there, at rupees 25. Okay, so here it is written, find out the value of closing stock. Inventory valuation, the closing stock. Find out the value of closing stock as on 31st October 1999, for which you have to prepare a stores ledger account by adopting fast in fast out method of pricing material issues. So at the top of the format, see, at the top of the format you have to write stores ledger FIFO, stores ledger within bracket FIFO. But what do you mean by stores ledger? If somebody will ask you that, please define the term stores ledger, then you will say, sir, stores ledger is a document which will which will show that how much quantity have been received, at what rate it has been issued, and at what is the balance amount. So quantity as well as amount has to be mentioned in the stores ledger, but in bin card only quantity received and quantity issues have been mentioned. So this is the difference between, the big difference between bin card and stores ledger. And as we know that there are different methods of valuation of inventory. As per the fast method, let us solve this particular problem, that is fast in fast out. So for this, you have to prepare this particular table. So mainly there are five columns, main five columns, and the last three columns is again to be divided, or what, segregated into three parts each: quantity received, in unit, rate of received, amount of received. Similarly, quantity issued, rate at which it has been issued, and what is the total amount have been issued. Similarly, balance quantity unit received, and rate at which balance is there, and amount of balance. Okay. So on 1st October, in the date column, you have to write the date. On 1st October, opening balance is there, for which you have to write a notation that is in the particular column. Okay, write in the particular column. Here it is written, where I am putting my cursor, where I am highlighting. that is 1st October 1999. 200 units at the rate of 25. Okay, that is the opening balance. So here, go to the date column. Here you have to write 1st October 1999, and in the particular column you have to write to balance B by F. Either you can write B by F or you can write B by D, brought down or brought forward, and directly you will go to the balance column. That is how much quantity balance is there, 200. What is the rate, 25 each. So what is the total amount, 5000. That you have to write 5000. Any doubt up to this, that while preparing this toast ledger? Any doubt?
So
Okay.
why to write to balance B by F or B by D? Because it's not written anywhere.
See this, why you are writing. Your question is why you are writing, or why one should write this two balance brought forward.
Yes, sir.
Because here in the question, here it is written the stock on 1st October 99. That is the opening stock. Okay, opening stock, that directly balance. In the balance column, it is to be reflected. You have not yet received, you have not yet issued anything. Okay, so from the last month, that is 30th September 1999, that was the closing stock. But for 1st October 99, this is the opening stock. Yes or no? So
Yes,
that's
sir.
why directly you have to write in the balance column. 200 unit, 25 rupees, and the total amount is 5000.
5,000.
Out of that, then only you will issue or issue. Then on 4th October 1999, hmm, you have received, as per the question, how much quantity you have received? 200 quantity. Okay. What is the rate you have received? 24 rupees. What is the total amount? 200 multiplied by 24. The total amount is 4800. So as we are following FIFO method, we should not add all these quantity. So in the balance column, we have to reflect the first quantity, first balance, that is 225,000, and second on 4th October 1990, 224 4,800, and you have to put it a block. Okay, that means there are two grades of material. That this is the first grade, this is the second grade. Then on 5th of October 1999, 250 units you have issued, for which you have to write in the particular column one notation. That notation is requisition slip number. While issuing, you have to write the notation requisition slip number. While receiving, you have to write the notation in the particular column goods received note number. Goods received, like that. While receiving, goods received note number. While issuing, requisition slip number. So as per the question, how many quantity you have issued? 250 quantity you have issued. So here at the top, at the first part, 200 is there. Okay. So first of all, you have to issue this 225 5,000, and from the second grade of material, out of this 200, you have to issue only 50 unit, 24 rupees, 1200. So how much rest is there? So 200 minus 50, 150 is there. 150 multiplied by 24, that will give you 3600. Then 10th of October 1999, goods received note number. You have received 150 units at rupees 23, 3,450. Again, what was the previous balance? 150, 24, 3,600. This is the current balance, 150, 23, 3,450. So both have to be kept in a particular box. Then again, on 12th October 99, you have issued 200 units of quantity to the production department, for which you have write a notation, that is requisition slip number. And from the first grade of metal, 150 you have to issue, 150, 24, 3,600, and from the second grade only 50 units you have to issue, 50, 23, 1,150. So what should be the balance? 150 minus 50, so here it is 100. So 100, 23, 2300. Then again on 18th of October, you have received 100 quantity, for which you have to write the notation goods received note number at rate 24, 2400. So previous balance was 100, 23, 2300. Current receipt is 100, 24, 2400. So that you have to keep in a particular box. Similarly, in 22nd October 99, again you have received 100 quantity at rupees 23, for which you have to write a notation goods received note number 100 into 23 2300. That means previous two balances along with this current balance you have to write, and it should be put in a box: 123 2300, 124 2400, 123 2300. Then on 25th October 1999, you have issued uh, 250 units. Okay, and as we are following FIFO method, so this first 100 and second 100 you have to issue, and out of third 100 only 50 units you have to issue. Okay, so rest how much will be there? 50, 23, 1150, and this figure is the valuation of closing stock as on 31st October 1999. 50 units left are 23 rupees, and the value of closing stock is 1150 rupees. Any doubt on FIFO method? Second, next method is last in first out method. The same question, LIFO, same question. How it will be solved in LIFO method. So at the top you have to write stores ledger within bracket LIFO. Stores ledger within bracket LIFO, and similarly you have to prepare the five columnar, and all the three columns have to be segregated into three parts: is quantity unit, rate rupees, amount rupees, quantity unit, rate rupees, amount rupees, quantity unit, rate rupees, amount. So as per the question on 1st October 99, balancing opening balance is there, for which you have to write the notation to balance brought forward B by A. So directly you have to write in the balance column under quantity units 200, rate 25 rupees, and the total amount is 5000. As per the question, on 4th October 1999, you have received 200 quantity, 200 unit you have received. At which rate? 24 rupees. What is the total amount? 4,800. So 200, 24, 4,800. That means you have to write the previous balance first. 225, 5,000, and the current receiving, that is 224, 4,800, and you have to keep it in a box. Then, as per the question on 5th of October 99, you have issued 250 quantity. Okay, you have issued 250 quantity. Where I am putting the cursor, this total is 250 quantity you have issued, for which you have to write a notation requisition slip number. Requisition slip number. And as we are following LIFO method, the second, last in first out, the second grade material will be issued first. 224 4,800 C, 224 4,800, 224 4,000. Then out of first 200, only 50 units will be issued: 50, 25, 1250. And what should be the balance? 150, 25, 3,750. Then on 10th of October 99, you have received 150 units at rupees 23. What is the total amount? 3,450, for which you have to write a notation, that is goods received note number. And in the balance column, you have to write the previous balance first: 150, 25, 3,750, and the current receipt, that is 150, 23, 3,450, and put it in a box. Then again on 12th October 99, you have issued 200 units. 200 units you have to issue, and we are following which method? We are following LIFO. That means this 150, the second 150 will be issued first. 150, 23, 3,450, and out of the first 150 only you have to issue 50, 25, 1,250. And what will be the remaining balance? The remaining balance will be 100, 25, 25. Then, as per the question on 18th of October, you have received 100 units. But 99, again, we have received 200 number, goods issued note number at different rates, for which you have to write the previous balance. So, see 100, 25, 2500, and this is the current balance: 100, 24, 2400. Then, this 100, 23, 2300, like that, you have to write and put it in a box. Then, on 25th October 1999, you have issued 250 units, and we are following which method? LIFO method. So this last, that is 123, this is 23 2300 will be issued first, because LIFO last in first out. Okay, 100, 23, 2300, 100, 24, 2400, and the out of first 100, only 50 units, okay, will be issued 25 rupees, 1250. So what should be the remaining balance? Remaining balance is 50. At what rate? 25. What is the value of closing stock? 1250 rupees. Clear? So, what is the difference between LIFO method and FIFO method? The difference is that while valuing the FIFO method, if you follow the FIFO method, the balance of stock is less. Here, the balance amount of stock 1150. But if you follow the LIFO method, the balance amount of stock is 1250. Clear? Similarly, in simple average method also, the value of stock may be changed either from LIFO or from. So let us solve simple average method. Okay, same question, simple average. What do you mean by simple average method? You all know or you all have studied in your school career simple average. Okay, that means let's say one simple example I want to cite over here. So if somebody will ask you what is your average percentage of mark you scored in plus 2. Okay, so you have to say that in metric I got 60%, and in plus 2 I got 80%. The total is 140%, and divided by 2, that 70% is my average qualification. It's like that. Here in simple average also, you have to add two different rates or three different rates which are not yet issued and divide it by two or three different times, so that it will give you the simple average price. And basing upon that simple average price, you have to issue that quantity to the production department. So same question, format little bit change. That balance column only has to be segregated into two parts. No rate column is there in the main balance column, only quantity units and amount rupees. So in the date column, you have to mention 1st October 1999, and in the particular column you have to write two balance brought down or brought forward. Directly you have to write 200, because as per the question, see, as per the question here it is written the stock on 1st October 1999 200 units at rupees 25 per unit. So as I told you, there is no rate column in the simple average method. So directly you have to write 200 quantity in the quantity column, 200 units in the quantity column, and amount 200 multiplied by 25, that 5000 rupees in the amount column. So as per the question, 4th of October 1999, you have received 200 units. 200 units you have received at what price? 24 rupees. Okay. So what is the total amount of receipt? 4,800. But in simple average, you should not record in segregate manner. You have to add with the existing balance. So previous balance was how much? 200. Current receive is 200. So 200 plus 200, total is 400. And previous amount was 5,000, and current amount is 4,800. So 5,000 plus 4,800, 9,800. On 5th of October 1999, again you have issued 250 unit, but at what price? The price is, see, in the balance here at what price? 25 rupees. Here is 24. So what is the simple average? 25 plus 24 divided by 2. So here it is written 25 plus 24 divided by 2. That will give you 24.50 paise. So 250 multiplied by 24.50, which will give you 6,125. Okay. So out of 400, you have issued 250. So remaining balance is 150 units. So 9,800 minus 6,125, the resultant figure will be 3,675. Then again on October 10, 1999, you have received 100 units of quantity, 150 units of quantity at 23 rupees. The resultant figure is 3,450, for which you have to write a notation, that is goods received note number, and in the balance column, directly you have to add with the previous balance. So 150, this 150, that will give you 300. Here 3,675 plus 3,450, that will give you 7,125. Then again on 12th of October 1999, uh, 12th of October 99, you have issued 200 units, for which you have to write a requisition slip number. Okay, so what is at what price? See, in this previous issue, 250 units you have issued. That means this past balance has already been issued. So only the new two balance are to be recorded into consideration. This 24 plus 23. divided by 2. So that will give you 23.50 paisa. So 200 multiplied by 23.50 paisa, that will give you 4,700. So out of 300, you have issued how much? 200. So rest is 100, and from 7,150 you have issued 4,700. What will be the remaining? 2,425. Similarly, on October 18 as well as on October 22, we have received 100 quantity each at 24 rupees as well as at 23 rupees, and the total amount of received is 2400 and 2300, for which we have to add with the previous balance 200, 4,825. Again, this 200 plus 100, that will give you 300, 4,825 plus 2,300, that will give you 7,125. Then on 25th October 1999, again you have issued 250 units, but at what price? Okay, so here three different prices have to be taken in order to average, in order to find out the simple average price, because three, the last three, 23 plus 24 plus 23 divided by 3, because these 200 and the opening 200 has already been exhausted. Okay, so no remaining balance was there. That's why only the last three rates are to be taken into consideration in order to find out the simple average price, 23 plus 24 plus 23 divided by 3. So here, so 250 units you have issued, for which you have to write the notation requisition slip number 250 multiplied by 23.33, that will give you 5,832.50 paisa. So out of 300 unit you have issued 250 unit. What will be the remaining balance? 50 unit. What is the remaining amount? 7,125 minus 5,832.50, that will give you 1,292.5. So this is the value of closing stock as on 31st October 1999. Clear? So see, in FIFO method, the value of closing stock is different. In LIFO method, the value of closing stock is different. And in simple average method, also the value of closing stock will be different. Okay. The next, we'll discuss the another important valuation method, inventory valuation method, that is weighted average method. Same question in weighted average method, how we will solve the same format like simple average method. At the top, you have to write stores ledger weighted average. And you have to prepare this particular table. First column is date, second particular, third receipt. The receipt issue column are to be divided into three different parts: quantity received, quantity rate at which you have received, and the total amount of receipt. Similarly, quantity issued, the rate at which it has been issued, and the amount of issue. And the balance column is to be segregated only in two parts, that is quantity unit and amount. So on 1st October 1999, as per the question, what is the balance? 200 unit. What is the price? 25 rupees. So directly you have to write in the balance column 200 multiplied by 25. That will give you 5,000 rupees. Similarly, as per the question on October 4, 1999, 200 units you have received, but what should be written on the particular column as notation? Goods received, note number. At what price you have received? 24 rupees. Okay, so 200 multiplied by 24, that will give you 4,800. As we are following weighted average method, there is no need to segregate the two different items. Rather, you have to add it with the previous figure. That means previous balance was 200. New receipt is 200. So 200 plus 200, that will give you 400 units, and previous balance amount was 5,000, and the current balance is 4,800, and the total balance is 9,800. Clear? The next, on 5th of October 1999, 1999, you have issued uh, what? 250 units you have issued. But what is the price? How this price have been found? What is the logic? In weighted average, see, 9,800 divided by 400 multiplied by 250, then only you can find out this particular price, that is 6,120. So how this 24.50 have been found out? 9,800 divided by 400. Let us check from your calculator. That will give you in weighted average 9,800 divided by 400. That will give you 24 rupees 50 paisa. So what will be the balance? From 400 you have issued 250 units. So what will be the balance? Balance is 150. And what is the balancing amount? From 9,800 you have issued 6,125. So 9,800 minus 6,125 will give you 3,675. Then again on 10th of October 1999, you have received 150 units. 150 units at what rupees? 23 rupees. What is the amount? Amount is 150 multiplied by 23, 3,450. Okay, so previous balance was 150 and current receipt is 150. So 150 plus this 150, that gives you 300. And previous balance was 3,675 plus 3,450. The total balance is 7,125. Then on 12th of October 1999, the organization has issued 200 units. But what is the price? How one has one has to ascertain at what price this 200 quantity has been issued. Okay, so see 7,125 divided by 300, that will give you 23.75 paisa. So if you multiply this 200 multiply with 23.75, that will give you 4,750. Okay, so out of 300 you have issued 200, so 300 minus 200. Okay, balance is 100. So and the balancing figure 7,125 minus 4,750, that will give you 2,375. Then on October 18, you have received 100 units at 24 rupees, and the total amount of received is 2,400. So previous balance was 100, current received is 100, that will give you, that is 200. Previous balance was 2,375 plus current balance is 2,400. If you add it, then the new balancing figure will be 4,775. Then again on 22nd of October 1999, as per the question, you have received 100 units at what rate? That is at 23 rupees. What is the total amount of receipt? 2,300. For which you have to write a notation, that is goods received note number in the particular column, and with the previous figure you have to add the current figure of receipt, that is 200 plus 100, that will give you 300, and 4,775 plus 2,300, that will give you 7,075. Then as per the question on 25th of October 1999, you have issued 250 unit, but what will be the price? Okay, for which you have to write the notation requisition slip number. So the price is 7,075 divided by 300, that will give you 23 rupees 58 paise. That is the weighted average price. So 250 multiplied by 23.58 paisa, which will give you 5,895. What is the balancing figure? The balancing figure is 50. So because out of 300 you have issued 250, so remaining balance is 50. And what is the balance amount? 7,075 minus 5,895, that will give you 1,180. So this is the closing balance of stock or valuation of stock. What is the total stock lying at the end of the month? That is on 31st October 1999, 50 units. And what is the amount? Amount is 1,180. So from this, we ascertain that the value of closing stock is differing from different methods. It is different in the FIFO, it is different in LIFO, it is different in simple average, also it is different in weighted average. Okay, so with this, we come to an end of today's session. Any doubt up to this? If you are having any specific doubt, you can ask me.
No, sir.
Okay, so let us call it a day. Again, tomorrow we'll meet with a new particular topic. Okay, thank you. Thank you. Good night. Now I'm leaving.